As much as employees should work on the basis that they just love the job that they do, they get innate pleasure out of all the work that they do and their accomplishments, at the end of the day, employees will also want to receive some sort of rewards. The rewards could be pay, it could be compensation, it could be a promotion. They're looking for something that they can get at the end of the day as a kind of signal for all the hard work that they've done. So this topic is about the types of rewards that employees get. And I'm going to separate the rewards into two categories. One is known as monetary rewards, and we're going to put that over here on the left. And then the other one, simply the opposite of this. We're going to call it non-monetary rewards. These are two types of rewards that employees get as a result of the work that they do. And the difference between the two is quite simple. It's to do with cash. With monetary rewards, the employees actually get cash, and it's cash that they can spend on whatever they want to spend. So examples of monetary rewards include things like bonuses and salaries and wages. They actually get cash and they can do what they want with it. Non-monetary rewards are non-cash based. They are tied to a specific sort of thing. So let me give you some examples of non-monetary rewards, and you're probably familiar with some of these. Your parents probably get these, and you've probably seen other your uncles or aunties or your even teachers get these. So examples of non-monetary rewards, we're going to call one of them fringe benefits. Fringe benefits are things like insurance or medical benefits, retirement funds, and also holidays. So if you think about it, these types of non-monetary rewards, and let's see if I can color this, there we go. These types of non-monetary rewards, can I color that as well? Yes, I can. So non-monetary rewards, they're non-cash based, and they are tied to a specific purpose that the employees must use it for: insurance, for medical benefits, for retirement and holidays. Other examples of non-monetary rewards are things like training opportunities. For example, the company is willing to send their employee on a training program to get a master's degree or to get a diploma degree. Other ones could be promotion. Now they are simply a director. They could become a managing director. Or they could go from, say, just a regular teacher to a department head. Other types of non-monetary rewards, let's also include in here. Oops, see if I can do that. Another type of non-monetary reward would simply be more autonomy at work. So they may get more responsibilities, more autonomy. They are now in charge of different people. They become managers where they actually have to make decisions that affect the company. These are rewards. You're getting more responsibilities. You're getting more autonomy. You're getting more challenging work. And I'm going to add one more in here. You've probably heard about this type of non-monetary reward, and I'm going to call it better working environment. Now, this can include things like free food. It can include free parking. It can include like recreation facilities, like having a swimming pool or a volleyball court nearby. You've probably heard of some of the non-monetary rewards that companies like Google and Facebook give to their employees. So the important thing to remember, going back to the start, monetary versus non-monetary. Monetary rewards are things like cash-based, things that your regular salaries and wages, whereas non-monetary are non-cash based, and you have to use it for a specific purpose. And the one thing you should realize is that with the monetary rewards, and I'm going to go into a little bit more detail on this in just a second, with the monetary rewards, let's change that color. Oops, it's not working. Never mind. With the monetary rewards, it's got a very high motivational impact. Employees need salary and bonuses to survive and to keep going and to motivate them to work. They need that cash to spend on whatever they want to spend. Whereas non-monetary rewards, it has a lower motivational impact on employees. Employees cannot survive just on the basis of non-monetary rewards. However, it does improve their loyalty to the company. It can improve their well-being as well. If they're getting insurance and medical benefits, it can improve their well-being. It can improve the company's image, and the sort of sense of belonging that people feel towards the company if they're getting all these non-monetary rewards. But it has a lower motivational impact than monetary rewards. I'll just dig in a little bit into monetary rewards, because as I said, this is kind of the most important type of reward that employees get. It's the cash that they get, and it's the thing that will help them to basically survive and to motivate them. And I'm going to simply split monetary rewards into two categories. One is time-based, and let's put that in red over here. And then the other one is called performance-based. Oops. Let's see, performance-based. And let's put that in blue. Okay, so we have two types of monetary rewards, time-based and performance-based. And I'll just draw a line here so that you know that both of these are examples of monetary rewards. Time-based is, well, as the word suggests, is compensation, is pay that you get for the time that you work. And so examples of these are wages. Can I go back in here? Yep, are wages. Nope. Sorry, wages and salary. So if you work 10 hours a day and you're getting paid $30 an hour, you would get $30 times 10. Salary, you get paid every month. So if you work 5 months, and you're getting $20,000 a month, you would get 5 times $20,000. You get $100,000 during the course of those 5 months. So time-based pay are things like salary and wages. They're very predictable. No matter whether the time is good or whether the time is bad, you're going to get paid this. As long as you work those few hours or those few days or those few months, you will get paid this pay. So this is the major type of compensation of money that employees get. It is predictable, and you get it in good times, you get it in bad times. Performance-based pay is a little bit different. As the name suggests, performance-based pay is compensation that you get when you perform well. It's also known as incentive-based pay. So when you perform well, when you work hard, when you accomplish certain things, you get this pay. And I'm going to give a few examples of different types of performance-based pay. First one is known as piece rate. Now, piece rate is pay that you get when you produce a product. So maybe piece rate says that you get $5 per product produced. So if you produce 5 products and you're getting $5 per product, you will earn $25. If you produce 100 products and you're getting $5 per product, you will get $500. So it is money that you get per product produced. Another example of performance-based pay, and you've probably heard of this one, is called commission-based pay. The difference between, commission-based pay is money that you get when you sell a product. So if you successfully convince a customer to buy something, you get paid. It could be, say, $10 per shirt sold if you work in a clothing store. So if you sell 10 shirts and you're getting $10 per shirt, you will get $100. So piece rate is when you produce a product, when you make a product, you get paid. Commission-based pay is only when you sell that product. So salesmen, for example, in a clothes store will usually get a lot of commission-based pay because they get paid on the basis of the number of clothes that they sell. One more, let me give you two more. One more that you should know for performance-based pay is a bonus. Usually bonuses come at the end of the year. once a year, maybe in Christmas time, maybe in January, and it is based on how well you have worked during the course of the year. If you've worked really well, you could get a big amount of money deposited into your account as a reward, based for the hard work that you've done. So it's usually a one-off payment at the end of the year. It could be, say, 10% of your total salary, 20% of your total salary. Sometimes it can go to 200% of your total salary if you're very, very successful. And one more that I want to inform you about is known as profit sharing, or let's call it stock-based compensation. This is where you get paid a share of the profits of the company, or you get paid in stock of that company. So in other words, if the company's profits increase, you get more money, or the stock price that you have may increase, and so you're getting more rewards. So if you look at all of these performance-based rewards, hopefully the thing that you will notice is that this is unpredictable. That if it's bad times, if you're not producing anything, if you're not selling anything, if the company's not making any profits, your performance-based rewards will be very low. They may even be zero. However, if the company is doing very well and you individually are doing very well, you can make a lot of money from performance-based rewards. So performance-based rewards can be very motivational, because the more you work, the better you work, the more productive you are, the more money you may get. In contrast, time-based pay is kind of this predictable, steady amount of money that you get based on the number of hours that you work, based on the number of days or months that you work. It's steady. But performance-based pay can vary a lot, it can be irregular, and it can have very high motivational impact, because you know that if you're more productive, if you're more successful, you're going to get paid more. So just to kind of summarize, we've learned about non-monetary rewards and monetary rewards, and within monetary rewards we've learned about time-based pay and performance-based pay. And you should know the differences between non-monetary and monetary rewards, and also the differences between time-based pay and performance-based pay, and give relevant examples.